All right, everybody, welcome back to another video. So in this video today, we're going to be going over pullbacks, the different types of pullbacks, and part two really of just continuing our education here in terms of market structure, in terms of trends, in terms of pullbacks. Now, when it comes down to pullbacks, there's a lot of things that you need to take into consideration when actually looking to continue on in the trend. So again, going back to the last videos that I've talked about, maybe I haven't talked about this yet, but it's something that does need to be stated. You always want to identify the overall trend on the weekly and the daily time frame. Really the daily time frame. You want to look at the overall trend here. So again, looking at the daily time frame here, we see that price is broken out of this resistance here, and that we have support along this area down here. Let me kind of just adjust this a little bit. Roughly, let's just leave it at around here, right? So once price actually broke to the upside, this could be considered our first leg within our 3-leg extension, right? Which we could see price go right back up. So this is just a standard pullback back into this level of structure where we could look to take a buy position. So this is just going to pretty much just be a standard pullback here. Now, one thing that I also want to go over, which is worth mentioning, are the different types of pullbacks that I didn't mention in the last video. So in some market conditions, right, when price is trending, let's say you have a bearish trend where price is making lower lows and lower highs, and then you see price just start to consolidate, right? The probability for price in this situation here is going to be a lot higher for price to continue to actually trade lower along with the trend. Now, it always depends on where this is, because if this is just in a random area, then it can just happen. But sometimes we may see a reversal, but the probability for the trend to continue is actually a lot higher. This is just another form of a pullback here. This is just going to be a consolidation pullback where the trend continues. Or you may have ascending and descending wedges, where an ascending wedge is where the market is trading higher, right? We're making higher highs and higher lows. It hits resistance, then forms a higher low, then a high, then a higher low, then a high, then a higher low, then a high, where then it typically will break above the highs, but at the same time, it's always forming higher lows. This is going to be an example of an ascending wedge, and a descending wedge is pretty much the opposite, where price is forming lower lows and lower highs, where then it starts forming lows and highs and lower highs. So here we have our lows, and here we have our lower highs. This is an example of a descending wedge. Like I said, there's many different forms of pullbacks within the market, but I just kind of wanted to cover that really quickly. So again, when it comes down to our major structure points and our minor structure points, we know that we have our major areas of structure, then we have our internal levels of structure in terms of pullbacks. Like you see, like this type of condition here isn't really a great condition to look to hold positions long term, because there is no steep pullback. Like if we break this down to an hour time frame, right, we could see a little bit more detail and we could potentially trade it, but not based off the daily time frame. And then we could see here also that based off of our levels of structure, that here is our first higher high, here is our first higher low. Then notice how price continued. Here's our second higher high, and then here's our higher low. So we know we're going to look to buy as long as this price maintains its level of structure here. As long as price doesn't come and break under our previous higher low, we're going to look to buy. It could do whatever it wants in between, but as long as this does not break here, we're going to continue to look to buy, which then you can kind of see an example of an ascending wedge here where price does this, right? Which there you go. There's an example of an ascending wedge right there. And then once price actually broke above this high, right, we know that this is our new higher high, that this is our new higher low. I'm going to get rid of the old ones just so you guys don't get confused here. And then you can see price continue to trade higher. Now, this isn't going to be considered a higher high, nor this is going to be considered a higher low, because it has to be a significant, a steeper pullback. It has to look like this, not just this, not just this, but it has to look like this, right? So again, in terms of like market structure and pullbacks, there's going to be different types of pullbacks, right? So I'm just going to mark off higher high, higher low, higher high, higher low. This is just going to be a high because it's pretty much equivalent to price right here. So that's just going to be considered a high. Then we have higher low because again, this high is higher than, or this low is higher than the previous low, making it a higher low. Then we have a big extension to the upside where now this is going to be our new high. This is going to be our new low. Notice again how price came all the way up, higher high, higher low, high, low, higher high, and then it consolidated above the previous higher highs before continuing to make higher highs. This level of structure is valid. Just like I made the example where price does this, right? This is literally the same exact thing you're seeing, just in a bullish trend, as you guys could see here. So there's many buy opportunities that you could have taken from these trades, really just buying the higher lows. We'll go into a probabilistic trading later on in the future, but I just want you guys to be able to understand, identify pullbacks, identify higher highs, identify higher lows. So here we have again, higher high, higher low. This is going to be a high, this is going to be a low. Now, what you could see here is that our lower low is right here, and notice how price did not close under it. Even if it would have closed under it a little bit, but then closed back above, that's still valid and that's still rejected. And then we have price where it came all the way back up here, made a higher high, higher low, high, low, and then it continued to trade higher from that point on. Now, there's going to be trends within inside of trends, like I said previously, right? So one thing that I mentioned is that a higher low has to be broken on the on any time frame, really, for that market structure point to be valid. Notice how this higher low point was broken here. We have the clean break of structure. We have push up, down, up, break, retest, lower, right? This is a break of structure here, meaning that price is going to trade lower. But keep in mind, we're on the hour time frame here. So if I were to go to the 4-hour time frame, right, where was I? I was back here. If I were to go to the 4-hour time frame, that is right here. Notice how this is just a regular pullback within the 4-hour time frame. And then here is our higher low within the 4-hour time frame. And notice how price continued to trade higher after that, making a higher high, then a higher low, then a higher, or then a high, then a break of structure, and price came all the way back down. But there's going to be many conditions. This isn't really a trending condition. It's a consolidating condition, which you can still make money off of. But it's not really a trending condition such as this one here. This is a very nice bullish trend. And it trended all the way from December to about, let's call it March. So almost 2 quarters that it trended for, right? And again, you know, you're going to have lots of different levels of structure with inside of structure. But I just kind of want you guys to understand and, you know, just get the overall concept of things. Now, if we look at this current structure, which is this current price, we have a low, lower high, low, lower high, lower low, lower high, lower low, high, low, high, low. Well, technically lower high, then lower low, then low, right? So again, this is all just different levels of market structure. Now let's go on to a different pair. Take a look at a different, condition here. This is going to be, what is this? This is silver. Let's go to gold, which I wanted to go to gold. I don't know why I didn't click on it. But this is going to be gold here. And notice how things change very quickly, right? Let's go to the daily time frame, right? I want you guys to look at the trend here on the daily time frame. Then we'll go down to the 4-hour time frame, right? So on the daily time frame, we see price forming lower high, lower low, lower high, lower low, high, higher low, higher high. This is where we have the change in trend. This is going to be the bullish trend here. This is also going to be an inverted head and shoulders pattern as well, which if I haven't taught you patterns yet, you will learn that in the future. This is going to be a head and shoulders pattern. Then we have a higher high, higher low, higher high. Then we have a low. Now we have a higher high again. So it's kind of like, okay, where can I anticipate another pullback to jump in and look to actually buy here? Well, you see resistance, you see resistance, you see resistance, right? Now that price broke above resistance, the best thing for you to do is wait for price to come back down into resistance and then look to buy from there. Because what we expect is newfound resistance to be, or previous resistance to be newfound support. But what you could see here is how we have a higher high, higher low, higher high, higher low, higher high, low, higher high. If we go to the 4-hour time frame, things are a little bit different. What we see here are trends within inside of a trend, right? So we see price make all these highs, and we know on the daily time frame we're making higher highs and higher lows. But look at this on this 4-hour time frame. We have a low, we have a high, we have a lower low, lower high, lower low, high, higher low. Well, higher low in quotations. This is kind of just a random candlestick there, right? But we have a bearish trend on the 4-hour time frame. So if you see on the daily time frame, hey, the daily is very bullish, right? But the 4-hour time frame is bearish. What you should just simply do in a situation like that is wait to actually look to buy on the 4-hour time frame. Now, you as a beginner may struggle, with trading areas such as this, which will be easier later on. Once you get better at reading price and everything, things tend to clear out. But I kind of just want you guys to identify that. Now, let's take a look at a different level of structure, because typically when we talk about like pullbacks, what we're looking for is for, if price is trending, the best trading opportunities are to wait for price to pull back into our previous area of structure or support or resistance level, where we'll look to take a buy here, and then we'll look for price to actually go higher. So let's take a look at gold back here during this time, right? Notice how we have structure here and how we have structure here, right? Once price actually broke, which this is a double bottom pattern here, right? Lower high, low, higher high. Notice how price came all the way back down into this level of structure where it then went long. That's what you want to be looking for when looking to take certain trades. Now, if I go down to like an hour time frame, we could probably see a lot more of these examples. I just don't want to confuse anybody when it comes down to that. But anyways, right? So let's look at our main levels of structure here, right? We have this. We have point A, point B, point C. Then we have this. Then we have this. Can I move this up? Right, I'm going to move it like this. Right, we have higher high, higher low, higher high, higher low, higher high, higher low, and then higher high, then a break of structure. Then we have a lower high, lower low. First things first, notice how price came all the way back down to our previous higher low point, where let's focus on this area. Notice how price came all the way back down to our previous higher low, where it started trading and bouncing above and then went up. This is where you would want to look to take a buy position at your previous levels of market structure. Again, I'm going to mark these off in a different color. Let's do here. This is going to be our higher high, what I just kind of marked off there, what I circled. Right, I'm going to make this red. This is going to be our higher high. This is going to be our previous higher low. Right, this is going to be our previous or our new higher high. And now notice how price is trading at our previous higher low. This is where, or our previous higher high, my apologies. This is where we're going to be looking to take buys and looking to take trades off of these levels. So notice how price, each time it came back down into this level, price went up, right? So all you can simply do is look to buy here, and when price goes up, just take profits. If it comes back down into there and rejects, buy again. If price goes up, take profits. And you do the same thing simultaneously. You're just simply buying with the trend. Now, obviously, price consolidated here for a very long time, right? But then notice how price ended up breaking under, right? It went down very significantly, but eventually it came all the way back up. So if I were to go on the 4-hour time frame, we just simply condense things is what we do, right? Higher high, higher low, higher high, higher low, higher high, break of structure, lower low, right? I'm going to mark that off for you one more time again. Higher high, higher low, higher high, higher low, higher high, lower low. Break of previous higher high is a break of structure, is a change in trend. And look what happened after that. And again, these are all different types of pullbacks. These are more complex type of pullbacks, breather pullbacks if you want to call them that. Then we have lower high where we have previous market structure. And then price went all the way back down and formed that lower low. So it's you as a trader, it's like, hey, I'm going to wait for price to pull back into my previous level of structure to look to sell because that's going to give me the best sell opportunity, right? Meaning that you would not have sold here, you would not have sold here, but you would have sold here, and then that's where you would have made the money. Look how much price dropped right after that, right? If you would have taken a trade here and maybe targeted here, that's 423 pips, right? If you would have just done a single standard lot, you would have made $4,273.8, right? 10 lots, you would have made $40,000. It's insane, right? And then notice how structure just kept going, right? Look what happened over here. Here we have our previous lower low. All throughout this range is our lower low. Notice how price came all the way up to our lower low, retested. Now it formed a new lower high, and then it continued to trade lower. But one thing I want you guys to keep in mind, right, is if price does this and is here, this just because price is at your previous lower low does not confirm that this is your new lower high. When I'm going to say this very slowly, and I hope everybody understands what I'm about to say, right? When price is pulling back, and just because you start seeing some rejection doesn't mean that that's going to be your lower high. You are basically trying to look for the best price where you see price will reverse and continue in the opposite direction, right? So the new lower high is only going to be confirmed once it's actually completed and made that leg, that extension to the downside. That confirms the new lower high, so you move your levels of structure down, right? Notice how price formed a low here, then came up, formed a lower high, then a low, then a lower high, then a lower low. And then notice how price came all the way up to here, breaking the previous high, lower high point. What did it do after? Higher low, where then it made higher highs. Then it made a low, then it made a higher high, then a higher low, then a higher high. Notice how once that lower high broke, the trend completely 110% changed, right? And this is on the 4-hour time frame. This is why I always suggest you just follow the trend on the 4-hour time frame. Forget about the trend on the hour time frame, right? Your main trend is always going to be the 4-hour time frame and the daily time frame. It is as simple as that. So I kind of just wanted to break down structure for you guys. And again, the best areas in a trending condition to look to buy are going to be your previous higher highs here. This is going to be the best area to look to buy. Why? Because that is a previous level of support or a previous level of resistance where there has been take profit, right? In that sense, if there has been a take profit here before, there's most likely going to be pending buy orders here in the future, right? And that is just the best probabilistic mindset that you can have, right? And again, in this situation here, we're going to look to buy here, right? Now, if price were to come all the way down and break your previous higher low, forming a lower low, the best place to look to sell would be to wait for price to come all the way back to your previous low or higher low, anticipated to form that lower high, and then look for price to continue to go down. Now, if it continues, then you wait to sell at the previous lower low, and then that should be your new lower high, right? All we're doing is looking to sell and buy at levels of previous market structure. Market structure is always going to be key in our trading. So are supply and demand levels. Supply and demand levels we're going to be using for take profits and for stop loss placements, just because they make the most sense. Now, hopefully everybody did understand that. Again, we're going to get more in depth into everything else as the course progresses. We'll get more and more and more in depth. But until now, I'll talk to everybody in the next videos.